Hey everybody, it's Bernie Gallerani from Bernie Gallerani Real Estate. I have an interesting topic for all my homeowners that are out there right now. If you're a homeowner today, I want you to listen up. We are in tax refund season. That's the best part for all of us that are going to go out and hopefully get a great, big, juicy tax refund check. The question I want to ask you is, what are you going to do with it? Because I have a great suggestion that not only could put that money into great use, but watch this, can also put $150,000 to $180,000 better in your pocket or save you $150,000 to $180,000. So here it is. Now remember, we're going to focus this on your tax return check. And I'm just going to have to make some assumptions here because I'm not sure how much tax return checks anybody's going to get, but watch the math on this one. If you own a home today that you have a $500,000 mortgage balance on, so let's just say you bought a home and you financed $500,000 at a 6% interest rate over a 30-year term. That's 360 months that you're making payments on. And at that payment level, at $500,000 at 6%, and a fixed rate for 30 years for 360 months, on a monthly payment, you're going to pay $2,998 in your monthly payment. Let's just call it $3,000, make it interesting, right? If you make one extra payment per year, this is where the tax return money comes in. If you took your tax return money at that rate and you made an extra payment each and every year with your tax return money, instead of going and buying a couch or going out on a little trip and going to do all these other things, what if you just took your tax return money and you applied it to the balance of your mortgage? So you're really paying an extra payment every year, every 12 months, you're paying one extra payment. And what it's doing is it's applying about a $250 per month. That's times 12. That's where the $2,900 payment comes from, or the tax return payment. You're going to make an extra $250 payment broken down into 12 each and every month. Here's the cool results, and this is the fun part. Now what happens if you do this every single year with your tax return money, you will actually pay your house off not in 30 years, not in 27 years, not in 28 years, but in 24 to 25 years. So you're going to knock off 5 years to 6 years by doing this with your tax return money. And here's what happens. You save 5 to 6 years, right? That's what we can do the math on, but watch this. Just interest alone that you save by doing this, because you're making the house payment anyway, but on interest, you're saving between $150,000 and $180,000 in just interest on that particular piece of property. So what's really happening here? That extra payment goes directly to the principal, which lowers your balance faster, reduces how much interest you're charged going forward. So it's not that that money's going towards interest, it's only going towards principal, and that compounds your payment and speeds over your time of owning that particular piece of property through the payments you have, right? That's the fun part. See, most people think it's just one extra payment, but it's not. It's nothing but a decision. You already have the money coming in through your tax return. What are you going to do with it? Are you going to let the bank collect 30 years of interest? I hope not. Or cut them off early and build equity in your house faster. Guys, what would you do with $150,000 of money? $150,000 to $180,000. That's a tremendous amount of money. So what you're doing is you're paying $74,000 over the 25-year period of time if you do this year in and year out. So you're paying towards the balance, not the interest. So what happens is you're going to put $150,000 to $180,000 of more equity in your house, which I really love that, by the way. You're going to have $150,000 to $180,000 more, and you're going to pay it off even faster. And so what you're doing is you're cutting off it early from the bank, and so you get to take in all the equity, which I love. That one move puts you years ahead financially. So please, you're going to have some decisions to come up with here really quick when you get that check. Like, what do I do with it? Do I go on vacation? Do I buy some new clothes? Do I buy a new car? Guys, do whatever you want to do. But remember this, if you just put that towards the balance of your mortgage, you'll have it paid off 5 to 6 years sooner and save yourself $150,000 to $180,000. Hope this tip helps. Have a great day.